For the three major currency pairs, we are seeing the dollar move lower in trading today, although the price action is volatile up and down in currency pairs like the euro versus US dollar and the sterling versus US dollar. For the dollar versus yen, the movement has been mostly to the downside after reaching a key technical target. I'll talk about that, and we'll start by taking a look at the euro versus US dollar. In trading yesterday, we saw a volatile price action to the downside and then back to the upside. This was off of the CPI data, and this move back to the upside, lower dollar, was off of the hopeful peace out of Ukraine and the flow of funds out of the safety of the US dollar, I guess. The move down toward the close came back down toward this swing area through here. And in an early Asian session, we did seem to bottom against the high of that swing area, defined by a number of different swing lows and swing highs through this area, right through here and here and here and here. Nice floor there. And then we reestablished a floor here before moving to the upside. We saw price action above and below these levels with trading earlier this week, and in trading yesterday, even before the volatile move to the upside, we did see it try to break to the upside, then fail, move to the downside off that CPI. Today's base against that level helped to push the price back higher into this swing area through here, where the last two times we've moved above it, 1 and 2 right here. But like we did over here, we failed fairly quickly and started to rotate back to the downside. This level right here, the 1.0405 level, represents the 50% of the trading range for the euro versus US dollar since 2022. That encompasses a 2022 low and a 2022-23 high. Breaking below that level seems to have tilted the bias more to the downside. As you can see in this current hourly bar, we use that level as resistance before moving to the downside. We are moving back toward this swing area here, where from whence it all started in trading at the lows today in the Asian Pacific session. So this is going to be a barometer for traders. If we move below it, it's more bearish, and we'll look toward the 100 and 200 hour moving averages. That was broken yesterday, and then price moved higher above it, and all the sellers turned to buyers. So be aware of that on the downside. If we do hold support against this level, then we're going to be looking at the 50% retracement, 61.8% retracement as resistance on the top side, and see what happens against that area. So be aware of that. Right now we are seeing up the dip buyers. It looks like we're currently trading near the 104 level, just shy of the 104.05 level. Again, get above that level, get above the 61.8% retracement, and we're moving the other way once again. For the dollar versus yen, this currency pair reached a key target in trading yesterday. That key target came against the low of this swing area. The swing area is defined by a number of different levels through here, here, here. We fell below it in trading right here before reestablishing support against the area through here. You can see the adherence to these levels right through here, here, admittedly trading above and below the area through here before breaking to the downside. So coming back up to that area right there was a key test, and we passed the first test with the sellers leaning against that level. Also, it was near the 50% retracement of this move to the downside. This trend move from the January high to the February low. That level comes in at 154.897. So holding that level near the 78 level, the 78 high yesterday, was key, and we started to see a rotation into the close and saw increased momentum in the trading day today with the price moving down back below the 38.2% retracement. That should be disappointing for traders. In that we couldn't stay above that key technical target. We couldn't get to the 50% retracement. So we'll be watching this 38.2% retracement in early trading. Of course, we have data coming out with this US PPI and the initial jobless claims. Get above it. It would be more. We give the buyers more confidence to the upside. Stay below it, and we could see a rotation back down toward this level right here. Maybe even the cluster of moving averages down here, including the 100-day, the 200-day, the 100-hour moving average, 200-hour moving average. They're all coming together right in this area right through here. So be aware of those levels on the downside as well. Finally, let's take a look at the sterling versus US dollar. And like the euro versus US dollar, we moved higher and then lower, but we haven't moved back down toward the closing level from yesterday. And in trading here today, we did move above the high of this swing area, which the buyers had their shot once again and they missed. The pattern has been that we come up to it, we break it, we come back up to it, we find sellers, we come up to it, we find sellers, we break it, we come back to it, we find sellers. So here we break it again, and do we come back up into this area right through here and find sellers? We will see, but the pattern is fail on the break of that swing area and reestablish it as resistance. So be aware of this area between 1.24739 and 1.25 as resistance. Resistance where sellers may lean against that level off of the tacticals. On the downside, we have the 100-hour moving average and 200-hour moving average. Well, I should say the 200-hour moving average and the 100-hour moving average coming in at 1.2429 and 1.24177. Move below that level on further momentum increases the bearish bias. We did try to move below it through the CPI data yesterday, but failed against the 38.2% retracement of the move up from the January low to the February high. That level came in at 1.2377 and found the support buyers right here against that level before pushing back to the upside. So there you have it. A look at the three major currency pairs from a technical perspective to kickstart your day. We do have that PPI data. The number cruncher is going to take the data from the PPI and the CPI from yesterday, which are disappointing, and try to figure out a PCE data, which is the Fed's favorite inflation gauge. So be aware of that. Initial jobless claims that will also be released at 8:30. And then we have the reciprocal tariffs going in place from Trump today, calls it the big day, or the big one, I guess, something like that. And he's also speaking, already tweeting or social whatever, on the peace talks that he had with Ukraine and Russia's Putin, Zelensky and Putin yesterday, hoping for peace there. Kind of balance out the, what is the negative of the tariffs. We'll see how it all plays out. My name is Greg McCloskey. Good fortune to trading. Bye-bye now.